We actively trade, we thus provide liquidity, and we ensure that pricing is tight and that there aren't the wildest swings in the prices. But by doing that, we need to use Bitcoin for our trading purposes. So that makes Bitcoin productive in the sense that we can use it, that we can ensure that financial markets are running well and smoothly, and that we can make a return whilst doing that. And that part of that return, in the form either of yield or in another way, can indirectly be returned to the holders of Bitcoin.
We run 2 funds. We have about 250 million under management. I'm very excited about several pillars of the space. We're very excited about modular blockchain. The whole Web3 theme is big for us, and obviously DeFi. We're very keen on that and very very active in this space.
What really excites me at this point in time is that we're filming this kind of at the bottom, of the bear market. Hopefully, we look back at this, and this will be the bottom, but we obviously never know. But what really excites me about Bitcoin is that at this point there is a lot of adoption by market makers, by institutions, and they are not stopping. They are continuing to come, and they are looking for on-chain solutions, such as Zest protocol, but also many other things, to use Bitcoin more productively and not in a speculative way.
Even though we are in arguably a bear market and people don't know where we will be in a few months from now, you do see big US-based banks and investment firms becoming active in crypto. And the same goes for payment providers, which you see partnering with exchanges. So I think that's a very positive development currently, which you see in the institutional adoption of crypto. I think we're still in the beginning of the adoption of crypto. You see, we've had a few waves of retail adoption, slowly starting the institutional adoption. And I think in the years ahead, that institutional adoption will really pick up, and that crypto will be accepted.
So we're super excited to be one of the launching partners of Zest.
So Zest is on-chain Bitcoin lending protocol. So people can earn yield on their Bitcoin by putting their Bitcoin in a Zest smart contract, and borrowers, or the most credit-worthy borrowers in crypto that will be let onto Zest protocol, can basically borrow against their future earnings and earn a yield for those people that have deposited their Bitcoin. It's a Bitcoin credit marketplace.
We've underwritten over 700 million in loans in the past 18 months, lending out predominantly to crypto native firms, market making firms predominantly, and the likes of flow traders, our friends that are here, and many more. We've collected so many data points and so many experiences over the last 20 months that we feel we're very well suited to get active on Zest.
Yeah. So what does the future look? Well, the present of on-chain credit basically looks like that you send your Bitcoin to a company, and then it's basically in a black box, and that company lends it out, and you don't know what's happening. Now, ideally, the future of on-chain credit looks somewhat like Zest protocol, where you put your Bitcoin in a smart contract, and then from that smart contract, it's lent out, and the funds can always be traced, and you always know what's going on.
Where we differ from basically the platforms that run into trouble, we are very transparent in where we lend out the funds, as will be the case with Zest, but also on Maple, for example, exactly to whom we lend out, at what rate, at what tenor. So every dollar basically that we have in the pools is accounted for, whereas in a more centralized way, it was more of a black box situation. We get a lot of inbound questions from real institutional players, real traditional investment managers, etc. They're very intrigued about what is being built on DeFi rails. Those conversations are getting more intense and more into details. It's very encouraging to see that they take a keen interest in what's being built. It all starts with 2 things: more clarity on regulation. That is obviously the big elephant in the room, and also I think even more improvements on stuff like custody solutions and just ease of access to crypto. So if those 2 things improve slightly over the next 12 to 24 months, I think we're going to see much more adoption.